The REIT sector is offering hot discounts right now for investors with the courage to build their positions. Several of the best REITs, as demonstrated by metrics like growth in AFFO per share or adjusted funds from operations, are trading at bargain prices. I'm Jonathan, and today we're going to take a quick look at 5 REITs that are on sale right now. Time is money, so let's get moving. First, I'm going to start with 2 net lease REITs. Realty Income, ticker symbol O, aptly named the monthly dividend company, is the biggest net lease REIT out there. It's a member of the S&P 500 and has been making some recent splashes with big acquisition volumes. But more importantly, they generated solid growth in AFFO per share over a long period, and they did it while paying out a large dividend yield and raising that dividend for over 25 consecutive years. Realty Income is currently trading at $65.96 a share and has a forward dividend yield of 4.48%. It has a 5-year dividend growth rate of 3.4% and as an added benefit, pays monthly. It's currently almost 10% off its 52-week high, signaling a good time to take a look at filling in your portfolio with some shares. $100 invested in Realty Income in 1994 at its inception would be worth more than double the S&P 500, Dow, NASDAQ, or equity REIT index today based on that same investment. It's shown itself to be a proven winner again and again. And although I'm not at all a fan of the current environment for shopping centers, for instance, there is room for some net lease REITs like Realty Income within your portfolio due to the length of leases, low volatility of rental revenue, and market diversity options. Turning to our second net lease REIT, Agree Realty, ticker ADC, we have a REIT that's playing it even more defensively. To fund acquisitions, ADC already locked in valuations on issuing shares. Adjusted for those additional shares, which bring in a substantial amount of cash, the net debt to EBITDA multiple falls to 3.4 times. That's exceptionally low. They had minimal difficulty collecting rents during the pandemic due to the structure of the leases and the credit quality of their tenants, boasting names like Walmart, Lowe's, Home Depot, CVS, and Costco. ADC is currently trading at $64.20 a share and has a great forward dividend yield of 4.23%. It has a 5-year dividend growth rate of 6.61% and pays monthly as well. It's 15.5% off its 52-week high, marking a great entry point. ADC doesn't have as long a history as Realty Income, but I expect them to generate a very long history of dividend growth due to the defensive way they position their portfolio. Let's move on to a different sector with cell tower REITs. I'm bullish on 2 of the 3 tower REITs right now, American Tower, ticker AMT, and Crown Castle International, ticker CCI. They're both currently offering attractive prices for building positions. These REITs should all be successful in leasing space on their towers. They already have a huge volume of contracts signed to commence over the next few years, and I expect they will add even more contracts, which is precisely what their leasing terms have done over the last several. They could fund growth by issuing new shares, but I don't think it'll be necessary. If stock is issued, it would be to fund transactions that increase shareholder value. So, we should see normalized revenue per share increasing materially over the next several years. The way cell towers operate, the REIT can lease space on the same tower to a few different carriers. Carriers need to densify their network to provide the higher speeds that they're already advertising. As they lease that space, I expect the average number of tenants per tower to increase. Having another tenant has minimal impact on operating expenses, so I would expect revenues to increase faster than expenses, which would cause NOI or net operating income to grow faster than revenue. American Tower is currently trading at $236.21 a share and has a forward dividend yield of 2.41%. It has an impressive 5-year dividend growth rate of 19.1%, paid quarterly, and sits 13% off its 52-week high. Crown Castle is currently trading at $175.83 with a forward dividend yield of 3.39%. Its 5-year dividend growth rate of 8.66% is well above the market average. It pays dividends quarterly, and it's currently 16% off its 52-week high. There is one other cell tower REIT out there, but I'm not a fan of the company and the way it's being managed right now. Its current 1-year performance is attracting a lot of investors because it's pulled in over 30% capital gains in the last year. But SBA Communications has all the markings of a potential rough road ahead, considering its current debt situation and considering the dividend yield is just barely over the 1% mark. It's just not worth the risk in my opinion. Now maybe you're like, hey Jonathan, give me a REIT without retail real estate, and I don't really like tech REITs. No problem, I give you Terreno, ticker TRNO. Now, this is more for younger investors with a long horizon until retirement, as it does have a lower yield than the others in today's video, but it's definitely one to take note of. TRNO is an industrial REIT, and the recent plunge renewed the opportunity that was there throughout 2021. Share prices are down significantly for industrial REITs, but are expected to outperform the market again in 2022 amid supply chain disruptions and the continuing growth of e-commerce. Supply of industrial warehouse space is low despite record levels of new construction, and demand is high, driving historically low vacancy rates and 48 consecutive quarters of positive net absorption. Same-store NOI growth for industrial REITs has blown away the REIT average in 18 of the past 20 quarters. This is a great indicator for the industry in general because NOI growth is typically achieved when a property's revenue grows faster or at a rate higher than its operating expenses. Terreno Realty owns and operates industrial facilities in 6 major U.S. coastal markets. Positioning their warehouses where demand is high and supply is limited or shrinking gives the company considerable pricing power. It has a well-diversified customer base. The top 20 customers only account for about 28% of ABR or annual base rent. The largest customer, which is Amazon, contributes only 5.2%. Anticipated lease expirations over the next 3 years will never exceed 14% of the portfolio. Terreno is currently trading at $70.19 with a forward dividend yield of just under 2%. It has a 5-year dividend growth rate of 5.99% and pays its dividends quarterly. It sits 18.5% below its 52-week high as of the making of this video. Now, looking at the last 5 years, it has absolutely crushed the S&P 500, not only in total return, but also in capital gains alone. The lower dividend yield is definitely offset by the greater gains if you're early on in your investing journey. If you've been looking for a sale on REITs, they really are starting to present themselves now. They're out there. You just have to look. Or you can just continue to watch my videos. Thanks for hanging out with me today as we dug into these great REITs. If today's video helped you out in any way, pop that like button and subscribe to join the Cash Flow Nation. I'd also love it if you dropped a comment below and let me know what your favorite undervalued stock is right now. And if you're looking for my favorite REIT of all time, check out this video on the right. Thanks and see you next time.